Every day you carry a loan balance, you are paying an active financial penalty for past spending. If you hold multiple debts, credit cards, auto loans, student loans, compounding interest is constantly multiplying that penalty against you, mathematically working to drain your wealth. But you can reverse that math. The Debt Avalanche is a systematic approach designed to aggressively target and destroy debt, minimizing the amount of money you lose to interest. To build this system, you need two pieces of intelligence. First, gather the most recent statements for all your debts, specifically noting the current balance, the minimum payment, and the annual percentage rate, or APR. Second, draft a clear monthly budget to locate any extra cash you have available to deploy. Gathering this exact data allows you to stop reacting to bills as they arrive and start operating from a position of strategic control. Step 1 is mapping the battlefield. Write down every single debt you owe. Next to each name, write the total balance, the minimum payment required each month, and the specific interest rate. This debt dashboard table shows the core rule of the Avalanche method. You must sort your list by the interest rate, from highest to lowest. Look purely at the APR and completely ignore the size of the total balances. Before you start attacking that top number, you have to secure the rest of the board. You must continue making the minimum required payments on every single debt on your list. The safest move here is to automate these minimum payments. Setting up autopay ensures your lower interest debts are never accidentally neglected while your attention is focused elsewhere. Missing a payment on an ignored loan triggers late fees and damages your credit score, effectively sabotaging the progress you make. By locking in those minimums, you safely contain the lower priority debts. Your baseline is secure, freeing you up to focus all your offensive financial power on the single most toxic target. Look at the debt now sitting at the absolute top of your list. This is the loan charging you the highest interest rate, making it your most expensive liability. Take every available extra dollar from that monthly budget you mapped out earlier and channel it directly into this top target. Banks and lenders want you to pay only the minimums. It stretches out the life of the loan and maximizes the profit they extract from you. This bar chart compares two different payoff paths for a standard multi-loan portfolio. The first column shows a baseline scenario that relies entirely on minimum payments. In this minimum-only approach, the borrower will surrender roughly $57,000 to pure interest over the life of their loans. And keeping up with those minimums means they will be paying off this debt for a full 12 years. Now we apply the Avalanche intervention in the second column. Here, the borrower applies just $100 of extra budget each month, strictly targeting their highest interest loan, which sits at a 20. Take the exact dollar amount you were sending to that top debt and add it in full to the minimum payment of the second debt on your list. This process loops. When the second debt dies, you roll an even larger combined payment down to crush the third debt. The primary challenge with this system is psychological fatigue. If your highest interest debt happens to have a massive starting balance, it can take a long time to see that first victory. This split-screen graphic highlights an alternative approach called the Debt Snowball method, which targets the smallest balances first, regardless of the interest rate. The Snowball method provides quick emotional victories by eliminating small accounts fast. The Avalanche method requires more patience, but yields superior wealth retention by saving you the most money. By continuously rolling your payments downward into increasingly cheaper debts, you force the math of compounding interest to work as an accelerant for your own financial freedom. Reach the moment your final balance clears, and you are left with zero debt and total control over your monthly income. You achieve this by executing the system. Sort your list by APR, automate your minimums, attack the highest rate, and roll the payments downward. Your final imperative is to take that massive, combined monthly payment you generated through the Avalanche and immediately redirect it to fund a 3 to 6 month emergency cash reserve. Reaching this state means you have built a liquid financial fortress, ensuring you have the cash on hand to handle emergencies without ever relying on costly debt again.